First off, thank you so much for booking your demo call with us. Before we meet, we'd like to share with you a little bit about who we are, what we do, why we're different, and more importantly, how some of our trading models have outperformed traditional benchmarks such as the S&P 500 or the NASDAQ. But before we even get into it, a little bit about myself. I started my career in real estate investments back in 2018, and it wasn't until 2022 where I discovered proprietary trading. And at that point, I became completely obsessed with developing and coding financial trading models that were designed to beat these proprietary trading firms. First, it was just myself and my business partner, Bess, and it was just us two trading and using these trading algorithms. But friends and family members started asking, and one thing led to another, and that's how Vector ended up starting. And today, between myself and Bess, we have over $6 million in proprietary trading capital, and we service over 400 clients worldwide who are using these trading models on a day-to-day basis to beat the financial markets. But here's the problem with traditional investing. Most people measure their success against the traditional benchmarks, such as the S&P 500 or the NASDAQ. But here's the problem with that. Those asset classes are not as safe as most people believe. Historically, the S&P 500 has had devastating drawdowns. For example, the Great Depression, the market dropped by about 86% over the course of 34 months. Or if we look at the dot-com bubble, where the market dropped 49% and also took 7 years to recover. Even during COVID, which wasn't too long ago from now, the market just dumped 34% over the course of 7 days. And that's scary because whatever happens to the market is also a direct reflection of what is happening to your portfolio. So if the market is dumping, that means your portfolio is going to be dumping as well. And this is why we built Vector. Our trading algorithms are market neutral, which means we perform when the market is bullish and we perform when the market is bearish. So no matter what is happening in the economy, whatever is happening in the markets, we are going to be able to capitalize on long positions and short positions. And that is why even in 2025, with the craziness that we've seen with the news and the elections and tariff wars, we actually have not had a losing month thus far this year in 2025. And last but most certainly not least is the risk management aspect of this entire thing. Because we come from a background of proprietary trading, risk management is the most important part. If you don't have risk management set in place, then you are going to fail. There's a lot of trading algorithm companies out there that focus on grid style trading or martingale, where their risk is extremely high. It might look very good for a short amount of time, but it's like a ticking time bomb. It's only a matter of time until those type of trading models go into heavy drawdowns. I've seen drawdowns as high as 50-60% over the course of 48 hours with some of those trading algorithms. Ours is nothing like that. We focus on proper risk management, stop losses, break-even functions, trailer functions, these things that were put in place to have minimal drawdown and as well as the highest returns. And more importantly, our algorithms do not allow the end user to adjust their own settings, because we've spent years, we've spent thousands of hours not only back testing but live testing these trading models so that we can put together the most optimal trading settings risk management wise for the user. So there's no way for you to tamper with the settings. You set it and you forget it. So what is our product suite? Firstly, we have our futures algorithm. Our futures algorithm only trades one trade per day. It does not trade overnight. It is not a high frequency trading algorithm. It takes one trade, breaks out in the morning after the New York Open, after that volatility in the morning from the New York Open, and it looks to capture 50 to 80 points based on the directional bias established on the day. And this algorithm has been returning live about 3 to 6% consistently every single month. Second, we have our crypto algorithms, and our crypto algorithms consist of trading tickers such as Ethereum, Bitcoin, Solana, Polkadot, and the win rate between these trading algorithms hover around 80 to 82%. And lastly, we have our equities algorithms. We have strategies for tickers such as Apple, Tesla, Nvidia, Amazon. Even if we take, for example, our Tesla algorithm, that one is actually up over 600% since its inception. Every strategy is fully automated, designed for the end user to be as hands-off as possible, but more importantly, drawdowns are at a minimal, anywhere between 10 to 15% as max drawdown. So here are some common questions that we often get. The first one is do you guys have access to my money? And the answer is no. We are not financial advisors. We are not a hedge fund, a money manager. We are simply a team of developers that develop automated trading models designed for you to use on your own broker accounts. And the way it works, it's all done via an API. And even for our futures one, that one is not via an API. We give you access to the code, and you are to install that into your trading platform for you to use on your futures trading account. So the answer is no, we never touch your money, we never get to see it, we never have control over it. The second most common question that we get is, do you work with regulated brokers? And the answer is yes. We are not like those Forex algos that you see where you have to wire hundreds of thousands of dollars to an offshore broker that you've never heard before. We work with reputable brokers such as NinjaTrader for a futures algo, or Alpaca or Interactive Brokers for our equities algo, or for example Coinbase, which is the largest crypto exchange for our crypto algorithms. So yes, everything is completely above water, and everything that we use when it comes to broker wise is all regulated. The third most common question that we get is this safe? And the answer is yes. We have hundreds, if not thousands, of live executed trades that can tell us what the max drawdown of our strategies are. And historical data is showing us that depending on which asset class we're trading, our max drawdown can be anywhere between 10 to 15%. So drawdowns are completely minimal. And again, if you want to see this for yourself, that is the purpose of the demo call that you have coming up soon. And the fourth and last question that we often get is would it be problematic if there were too many people using our trading strategies? And it's a fair question. The answer is no, because even within our group of almost 500 traders now, our pooled liquidity makes up probably only 0.1% of the global liquidity that is out there. I guarantee you maybe even less than 0.1%. So even if 1,000 more people were to join our algorithm and to execute the same exact trades, it would not even be a blip on the radar. At the end of the day, the most important thing to us is integrity. We don't chase after hype. We don't care about selling people dreams. To us, we just want to build a trading model that is sustainable and performs well in any circumstance. That is why a European Union regulated hedge fund trusts us. That's also why we have hundreds upon hundreds of people that trust us and use our algorithms on a daily basis. It is because myself and my team, we only care about developing trading models that sustain for a long period of time. Minimal drawdowns, high returns. So what is next for you? So during your demo call, we will be showing you exactly how it all works, how the strategies work, live executions, past performance, all of the information that you need to make an informed decision. And we'll also, of course, be able to answer any questions that you have. But that's it. Thank you so much for watching this video, and looking forward to seeing you inside the Vector community.